Hey guys, welcome back to Father and Son Investing. I had someone ask me or pose a question the other day, if I had $10 to invest, what would I choose to invest in? That seemed like a wonderful question actually, especially for young people who don't have a lot of money. And of course, this channel is all about getting young people investing. So today we're going to talk about what I personally might invest $10 in. Coty is a stock that I purchased in April of 2020, right after the stock market took its big turn down. I got it right for around $3 a share. It went up nicely and then it came back down right back to about $3 a share last November. And since then, it has gone up and stayed up. They are a manufacturer of cosmetics and beauty products. I've been holding this stock since then and I plan to continue to hold it. I expect that it will get back to its $11 per share range. I'm hoping that it gets back in the $15 per share range, and I plan to hold it at least until then. Beachbody is another company that I like that's under $10 per share. I purchased this one, unfortunately, back when it was over $10 a share, but I like the company. I use their products frequently. By products, I'm talking about their exercise workouts, not their nutrition products. Besides just the exercise videos, another thing that I like about Beachbody is that they've recently merged with a company called Mix Fitness. Mix produces bicycles similar to the Peloton, but at about half the cost, although recently Peloton has lowered the cost of their bicycles. There are a few nice things about the Mix product. One of them is that with one membership you can have 5 profiles. So you'll pay for it once, but if you have a family with 5 people in it, or you have 5 friends, each of you can be able to use the bike without paying for additional memberships. There are also some other features that Mix has that makes the bike a little easier to use compared to a Peloton. The big thing that I see in their second quarter results is the digital revenue. It's $94.3 million. That's up 20% compared to 2020 and 61% compared to 2019. So some people may have just thought that this was a pandemic play. People at home can't go to the gym. But what we see is that even in 2021, they are growing their revenue digital streaming. Now, of course, their second quarter doesn't include their Mix Fitness merger, so it'll be interesting to see what their third quarter results have to say. One of the reasons to consider buying Beachbody, B-O-D-Y, is that they hit a 52-week low today. So this price hopefully is somewhere near the bottom. And I'm not the only one thinking that Beachbody is a buy at the moment.
I know nobody likes SPACs anymore, but this one's gotten crushed. B-O-D-Y. I think it's an early growth play in digital fitness. It's a good value here.
So he was saying it was good value at $7 a share, so at $5.22 it's got to be a steal. However, the one that I like the best on my list is Asensus Surgical, ticker symbol ASXC. It's actually up 170% on the year. It took a nice climb earlier this year, all the way up to about $6.88 a share. At one point, it has slowly come back down to $1.72. Now, why do I like this particular company? So if you're not familiar with this company, they have developed a surgical robot. Now, if you know anything about surgical robots, you know that Intuitive and their Da Vinci system pretty much rule this area of medicine when it comes to surgery. However, there are some companies which have entered the fray here, including Medtronic and Johnson & Johnson. Now, those companies are competing directly with Intuitive. However, Asensus Surgical is trying to steer clear of Intuitive and concentrating just on a particular area of surgery called laparoscopy. Right now across the globe, there are about 16 million laparoscopic surgeries that are taking place every year. Asensus Surgical is bringing digitization to the laparoscopic surgery process using their robots. So their robotic system allows a surgeon to use the same type of handheld equipment that they would use if they were standing at the patient's side. However, in this case, the surgeon is not standing at the patient's side. Instead, he's sitting at a console there, looking at a screen and performing the surgery. Now, one of the nice things about this equipment is it allows a surgeon to control the camera using their eyes. When I was in medical school, my job as a med student was to control the camera, and so you would push this camera in and out to try to get a wider field of view or a close-up field of view. Now instead, the surgeon can move the camera simply by moving his head forward or backward. That allows the surgeon to see exactly what they want to see. It's always a challenge. I remember the surgeon always telling me, move the camera here, move the camera there. And the other challenge is you have instruments moving inside of a patient, and if the camera's not on them, you don't know exactly where that instrument is going. The other nice thing about this system is that they have reusable instruments. With the Da Vinci, those instruments are going to get thrown away each time, which continues to add cost. In this case, these instruments, just like other laparoscopic instruments, can be reused, which will keep the cost down for a patient and for the hospital. Now, there are a few reasons why I really like this company when it comes to an investment. One of them is that they already have the regulatory clearance in many places in the world, such as the United States, the European Union, Japan, and other areas of the world where this system is already cleared for use. Now, another is their potential for growth. Right now, the surgical robotics industry revenue is going to be growing at about a 15% compound annual growth rate. Now, again, they're steering clear of Intuitive and their Da Vinci robot. They're letting Medtronic and J&J and CMR take on them, and they're concentrating on this laparoscopic area. Some other reasons to be considering them is that they have small instruments, 5mm and 3mm. What's important about the 3mm instruments? That is going to help them get into laparoscopic pediatric surgery. Now, when it comes to their being able to grow their business, it's really going to depend a lot on getting surgeons interested in their product. Now, one of the ways that they can help accomplish that is when surgeons who have trained on this machine, currently really located in the United States, in the eastern part of the United States, when those surgeons move on to other hospitals and they have been trained on this equipment, they're going to be interested in getting this equipment in their new hospitals. Now, one of the selling points for new hospitals will be the cost. For instance, this is just a comparison of the cost of using a Senhance robotic system versus using a Da Vinci robot for a hysterectomy. Now, in this case, it is a direct comparison to Da Vinci, who they're trying not to compete with, but let's just look at the price. $1,393 if you use the Da Vinci robot versus $559 versus a Senhance versus $498 if you just do this laparoscopically. So for an additional $60 or so, the surgeon can use this equipment with some added features which will help them better perform the procedure. And when it comes to time using the procedure, it's actually just a little bit faster to use the Senhance than a Da Vinci robot. Currently, this system is only installed in 28 active sites, which is really not very many around the world, so you can see how much of an opportunity they do have for growth. Now, in terms of that growth, they added 10 units in 2020, with 10 to 12 expected to be added in 2021. 3 of those have already occurred. Now, I did mention that they've had about 5,000 of these procedures performed using their robotic system so far. Just as a comparison, when it comes to the Da Vinci robot, you're looking at millions of procedures. So this is still in its infancy when it comes to this system. And also in terms of growth, they're expanding their indications for being able to use this equipment in various types of surgery. They're also increasing the capabilities of the equipment, such as recent 510(k) clearance for articulating instruments. Those would be instruments that have a joint to allow increased mobility of the system. And they also have the next wave ISU features that will allow the machine to provide advanced machine vision and augmented intelligence capabilities, as well as offer some advanced computer things like scene recognition and surgical image analytics. If we just take a look at how this company is doing financially, we'll see that their revenue is increased year over year. Now, they have significantly increased their cash on hand to be able to fund their business. You can see here the nice difference between year over year. We'll just finish this up by telling you one other reason why I like this company, and that has to do with their potential to be bought out. So a number of companies have been bought out over the last few years by other major companies. Mako, Mazor, Corindus, Auris. You can see there the acquisitions by bigger companies like Stryker, Medtronic, and Siemens. Now, down at the bottom, we see that Asensus is worth about $500 million right now. Compare that to Intuitive at $125 billion. But we can see what the buyouts for these companies have been. So we're looking at 2 to 3 up to 7 times the price potentially of where Asensus is sitting out right now for their valuation. All right, so that's it. If I had $10, where would I look to buy? Well, I'd be thinking about Coty. I would be thinking about Beachbody, but the one I really like is Asensus Surgical, ASXC, and their Senhance surgical system. I hope you enjoyed this information. If it was useful, please give us a thumbs up. We really need that. Until next time, Enjoy your investing.